You are in the camp of people that listened to Jensen Huang when he said this is going to be a $1 trillion opportunity or industry, and then very recently said, actually, it's going to be a $3 or $4 trillion opportunity, and now you, like many, say it's a bit more believable to us. Just explain your thesis.
Perfect, and thanks for having me on the show. I think in a prior segment you had Joanne on talking about how the pie keeps on growing. If you look at compute announcements since December of 2024 through date, we're looking at over $2 trillion of announced dollars of compute and over 40 gigawatts of power. If you look at what Jensen said historically, about 65 to 70% of that is related to compute. So if you look at what it could mean for NVIDIA, it's about $1.5 trillion really coming into the pipeline over a very recent period of time.
Tom, you saw the announcement between OpenAI and NVIDIA, right, from the end of from earlier this week?
Yes. Okay,
so on the internet, the analogy or metaphor that people are using with that is it's like an extension cable. That NVIDIA is the extension cable. They're unplugging from the wall and just plugging back into the cable. Do you see what I'm asking about? NVIDIA puts $100 billion into OpenAI in order for OpenAI to take $100 billion worth of NVIDIA gear.
Absolutely.
How do we interpret that?
I mean, there's two big concerns with the deployments of AI right now. It's one, power, and then two, the circular reference issue that you see brought up again and again. I would say you can flip this argument on its head. Obviously, it's early days here, and there is reason to be careful about circular issues in terms of investment. But I would ask, where should NVIDIA invest their money? I think buying back stock now would be one option, but Jensen's in founder mode here. He's looking to create an ecosystem where you're having more and more players actually drive AI further on. And I guess the other point would be, this is not just Jensen. You're seeing investments from AMD and Broadcom, and this is going to be something that's driven forward by a group of companies. But clearly a concern that many investors bring to light. But I do think that NVIDIA is in a unique position where they're taking the capital that they've made and they're reinvesting it in their space. So can look at that argument.
The rapidly increasing need for AI accelerators has contributed to NVIDIA's remarkable success. Gartner, a market research group, predicts that sales of AI accelerators will rise steadily in 2026. Additionally, NVIDIA is benefiting from its non-AI business, a trend that is probably here to stay. The world's biggest corporation, NVIDIA, had a wild journey on the stock market in 2025. Due to limitations on selling its chips to Chinese consumers and worries about the viability of investing in AI infrastructure, the company's shares fell during the first 4 months of the year. But in the last 5 months, it has recovered remarkably. Despite a weak start to the year, NVIDIA's stock has increased 32% overall in 2025. Now, investors will question if NVIDIA's stock can maintain its upward trajectory in 2026. In order to determine how much upside this high-flying technology company is expected to deliver by the end of next year, we will examine NVIDIA's catalysts in more detail. According to these statistics, NVIDIA may continue to expand at a respectable rate in the upcoming year. Because of its dominance in the market for artificial intelligence, AI chips, NVIDIA grew to become the biggest firm in the world. An estimated 80% of the market for AI accelerators is controlled by the corporation. Because businesses and governments are probably going to invest more in building enough cloud infrastructure to fulfill the growing demand for AI, it is on pace to produce solid growth in 2026. According to market research firm Gartner, businesses would spend $267 billion, up from $140 billion the previous year, on AI accelerators including graphics processing units, GPUs, and bespoke processors that are installed in cloud servers. It is anticipated that this will rise to about $330 billion in 2026. Given the rate at which cloud computing behemoths like Microsoft, Oracle, Alphabet's Google, and Amazon are increasing their sales backlogs, this is not surprising. In addition to these hyperscalers, neo-cloud providers like CoreWeave and Nebius, who lease GPUs to clients for AI workloads, have been securing large contracts and have substantial backlogs of contracts. In 2024, NVIDIA sold $102 billion worth of AI compute processors, indicating that it had about 73% of the market the previous year. If the above-mentioned drivers cause the expenditure on AI accelerators to reach $330 billion in 2026, and NVIDIA holds 70% of the market at that time, its data center compute revenue might reach $231 billion. Thus, in only 2 years, NVIDIA is expected to more than triple its revenue from AI accelerators. However, investors should be aware that the company's other business divisions are also doing well and may be able to support the data center industry's strong expansion. The stock may be positioned for further gains by these further catalysts. With the exception of its AI data center GPU business, NVIDIA made $28 billion in income from sources during the previous fiscal year, which concluded in January of this year and corresponded with 11 months of 2024. In addition to its networking business, these other categories include professional visualization, gaming, and the automobile industry. These non-AI data center semiconductor companies' combined fiscal 2025 revenue increased by over 29% over the previous fiscal year. With the secular growth opportunity that AI-enabled PCs, smarter autos, and digital twins bring, NVIDIA can continue to record excellent growth rates in these markets. Its non-AI accelerator businesses might add $40 billion to its top line in the upcoming fiscal year, assuming they expand by 20% in 2025 and 2026. Accordingly, consensus projections forecast that NVIDIA will make more than $270 billion in fiscal 2026, including the $231 billion revenue potential of the data center compute sector. It's important to note, though, that the forecast for the next year has been much increased. It won't be shocking if that estimate rises when businesses who depend on NVIDIA's GPUs to operate AI apps in the cloud choose to increase their expenditures. The market value of NVIDIA might reach $5.6 trillion if the company can generate $280 billion in revenue the following year and trades at 20 times sales, which is a discount to its current price-to-sales ratio of 26. This suggests that the stock price of this AI company has opportunity to grow and might potentially reach a valuation of $6 trillion, indicating a possible 30% increase. This week, NVIDIA announced that it will invest $100 billion in OpenAI, a move that demonstrates the size of the chipmaker's investment portfolio since the introduction of generative AI in 2022. The magnitude of NVIDIA's venture and public equity investments demonstrates the company's growing importance in the artificial intelligence and Silicon Valley ecosystems. In August, NVIDIA said that it has $4.33 billion in publicly traded assets. In July, the business increased the value of its non-marketable equity securities from $1.8 billion to $3.8 billion. This week, NVIDIA announced that it will invest $100 billion in OpenAI, a move that demonstrates the size of the chipmaker's investment portfolio since the introduction of generative AI in 2022. Just 1 week prior to that transaction, NVIDIA had announced plans to spend $500 million in self-driving car startup Wave, invest $500 million, $667.7 million in UK cloud provider Nscale, and invest $5 billion in former rival Intel. By offering money and access to its highly sought-after AI chips in return for ownership and knowledge of the future directions of some of the most exciting AI startups, NVIDIA's investment spending binge highlights the chipmaker's rise to the top of Silicon Valley's hierarchy. NVIDIA's largest investment to date would be the entire OpenAI initiative, which is anticipated to be carried out over an indeterminate number of years. Applied Digital, ARM, CoreWeave, Nebius Group, Recursion Pharmaceuticals, and WeRide are among the $4.33 billion in publicly traded holdings that NVIDIA revealed in a financial filing in August. NVIDIA's non-marketable equity assets were valued at $3.8 billion at the end of July, up from $1.8 billion the previous year. The vast majority of the businesses in NVIDIA's portfolio are strategically related to the company's operations, either be creating complementing technologies for its processors, renting out access to them, or utilizing them for robotics, AI, or enterprise software. However, a company is not always a customer of NVIDIA just because it is listed on its capital table. A representative for the company told CNBC, "We don't require any of the companies we invest in to use NVIDIA technology." For instance, the partnership between NVIDIA and OpenAI only designates NVIDIA as the startup's preferred source of computing power, not as its only supply. This week, the enterprise AI startup Cohere, for whom NVIDIA took part in funding rounds, revealed that it will use AMD chips in addition to NVIDIA's. With the release of ChatGPT in 2022, OpenAI raised awareness of the value of NVIDIA's GPUs worldwide. NVIDIA's market capitalization has expanded from slightly over $420 billion to over $4.3 trillion since then, and the company's yearly revenue has risen by 383%, from $27 billion in fiscal 2023 to $130.5 billion in the fiscal year that ended in January. According to a CNBC study of PitchBook data, NVIDIA made 16 investments in other businesses the year ChatGPT made its debut, including seed rounds and interest obtained through incubators. NVIDIA increased its investments to 41 in 2024, and excluding its commitment to OpenAI, the chipmaker has already made 51 transactions in 2025. Numerous commentators have expressed their opinions regarding this collaboration. The prize is huge for NVIDIA. Every gigawatt of AI data center capacity is worth about $50 billion in revenue, meaning this project could be worth as much as $500 billion, stated Matt Britzman, senior equities analyst at Hargreaves Lansdowne. Jacob Bourne, tech analyst at eMarketer, said, "The creation of frontier AI models effectively incorporates the need for NVIDIA GPUs, and agreements such as these should allay worries about lost sales in China." NVIDIA continues to double down on AI, as we always figured that CEO Jensen Huang would want to invest downward into AI factories. This announcement is much earlier than many would have expected, stated David Wagner, portfolio manager at Aptus Capital Advisors. Timothy Arcuri, a UBS analyst, reaffirmed his buy recommendation for the stock, citing a $200-500 price objective. Following NVIDIA's $100 billion investment in OpenAI and the significant income potential it presents, the rating was confirmed. According to UBS, the collaboration may bring in about $400 billion for NVIDIA over the course of several years. However, OpenAI's implementation plans will have a significant impact on the timeline. Through the agreement, NVIDIA will also be able to achieve its previously stated growth trajectory, which calls for a $3 to $4 trillion total addressable market by 2030. In the past, it has succeeded in gaining between 30 and 35% of the market. The company went on to explain how the alliance is primarily detrimental to AMD, shows some risk for Broadcom, and helps to maintain NVIDIA's dominance. Brad Gerstner of Altimeter Capital discussed NVIDIA's remarkable performance on CNBC in late August and outlined how the business is profiting from AI inference. At the time, Gerstner stated that the world's computing resources are limited. Consider this statistic from a year ago. In terms of computation and inference creation, Google generated over 9 trillion tokens every month. There are currently 980 trillion tokens. So it's a 100x rise in a year from 9 trillion to 980. To accomplish it, you must compute. As a result, the world's computing resources are severely limited. They are 50 years old. He stated yesterday that the world will continue to grow at a rate of 50%. So consider this. Are you going to expand at 50% if you grow and people ask? I think we're going to maintain market share, he added. Thus, it is agreed that data centers would generate $250 billion in income the following year. That will be more like $300 billion, or about $8 per share if they increase by 50%, correct? And at $8 a share, 200. It's around 25 times, you know. Hence, below-market PE multiples. This company, in my opinion, is making great strides. Companies are still spending a lot of money on computing, and the need for AI isn't going to slow down anytime soon, as seen by NVIDIA's most recent agreements with Intel and OpenAI, as well as Oracle's relationship with OpenAI. Can NVDA stock continue to rise, though? The backbone of AI infrastructure for LLM training and inference is currently made up of Blackwell and NVIDIA's Hopper infrastructure. However, due to competition and major firms' restrictions on capital expenditures, NVIDIA's growth is slowing down in comparison to prior quarters. Compared to its previous YoY growth of around 100%, NVIDIA's annual revenue growth in the most recent quarter was 56%. NVIDIA is expected to continue expanding, but not as quickly as it has in the past, due to its dominant position in the data center market and increased demand. Long-term effects on NVIDIA's margins are also anticipated due to growing rivalry from big businesses like Broadcom. NVIDIA recently made an impression on the market by partnering with Intel on AI infrastructure. $5 billion will be invested in Intel by NVIDIA. According to Jensen Huang, the agreement will allow both businesses in the PC and data center industries to access $50 billion in TM, According to analysts, the agreement would enable NVIDIA to move away from ARM-based architectures and overtake AMD in the data center and PC markets. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Just deployed in Europe with Nscale. They've been deployed in Neo Clouds and CoreWeave, for example, Tom. What's so interesting is where the house of cards could fall. What would limit this up and to the right perspective about AI compute needs and that feeding in to NVIDIA and indeed all of the semiconductors that currently have a stake in providing AI accelerators?
As you mentioned earlier in the show, it's the return on investment first and foremost. And I think that what we do in the note that we had out today is try to show what the investment from a chip perspective is looking like versus what the ROI is. And we do that by looking at hyperscaler RPO. So you look at AWS, Azure, GPC, Oracle, and over the past several years, that's been growing at a 30% CAGR, so essentially hyperscaler backlog. That's exploded to over 80%, and if you look right now, the backlog's at over $1.1 trillion. So what you're seeing first and foremost is that you're getting some ROI, you're getting some business that's stepping up. That's an area of the world that we can do a little more work on. The other side, which is less in the semiconductor ecosystem, is the power side, where if you look at what 40 gigawatts means, you're talking multi-major cities in terms of the deployment. So that's really where the investment needs to focus on from this point forward, because if you don't have a utility bill for someone living in a city and that's being sucked to another data center, that's a serious problem.
Tom, it's interesting that I think Alibaba chimed in, the CEO, saying 4 trillion is his number too by 2030. But I cast my mind back to March when there was a wobble in the market, when we did start to question some of the valuations. That was because the chairman of Alibaba had said there was a bubble in terms of AI infrastructure investment, particularly in the US. So how much of this, what alarm bell rings for you when we start to get into a valuation that screams bubble? Because you see NVIDIA could go up another 30% or so.
Yeah, I think there's two things to look at. The first sort of reset in valuations this year came around DeepSeek, and that was a change in where we saw the AI revenue coming from. We've transitioned to what was scaling laws in training, so all these guys making money on training, and now we're moving more to the era of inference, which is people actually using these models, seeing agents out there actually serving individuals. And so you've seen a shift in where compute spend has actually gone. So the ROI is helpful, and it makes me feel a bit better as we go along here, and we'll continue to look at OpenAI, Anthropic, and you'll see more fundamentals come out as time goes along. But the concern is always, these are very large numbers. Where do these dollars come from? First step is look at hyperscalers. If you look at today,
Yes.
The CapEx as a percent of op income is still around 50%. I wouldn't start to get worried until you're above 100% and getting to a position where you're obviously taking on debt to do this. And then secondly, I would look at the sovereigns, where globally you're starting to see countries invest in this, and that's additional dollars that is outside of that original pie. And that was always the proxy for when do we run out here? When do we get to the limit of hyperscaler CapEx?